Is there a bull case here that you could see these big cap tech companies broken up? How are you thinking about these sum of the parts exercises?
Well, I think it makes a lot of sense. These companies have, a lot of various businesses that are all growing pretty rapidly. If you look at, a company like Amazon, their web services division is growing north of 30+%. Online retail is still less than 10% of overall retail spending, so that still has plenty of legs to go. So there's still a lot of growth left in these companies. And I think Mike Santoli said it best when he said nothing has really changed with these companies. The only thing that's really changed is the rhetoric and the sentiment regarding these companies. And I think that can shift over time, but at the end of the day, fundamentals matter. And with these companies, as those positive fundamentals continue, the stock should respond in kind.
Paul, do you agree?
I agree to a certain extent. I would say that I go through in my own work some of the parts of analysis, and I think once you do that with the FANGs, the most attractive to me is Google, but the most interesting based on its rapid growth is Amazon. And so I would say, as a backdrop, that I still think trumping some of the valuation, because you're not going to be able to do too much valuation work with some of these companies, is the rapid growth of users and revenue. And that's why I continue to like folks like Amazon with Amazon Web Services. So, yes, the breakup analysis is somewhat important, but the revenue growth is always going to be the most important.
Paul, should investors be going through the bargain bin, looking at some of these recent IPOs that are trading below where they priced? I mean, I'm thinking Uber, Lyft, even some that are doing better than where they were trading on their first day, like Zoom, have come way down from where they were trading just a few weeks ago. If they were good at those hyperinflated, perhaps, prices, are they still good here?
Yeah, I think Zoom is interesting. It hasn't broken too badly. And some of the other ones that actually look like they have reasonable business models like Pinterest. But I think the ride-hailing business is uneconomic. And regardless of where Uber and Lyft are today, those stocks would go much lower. So I would not swoop in on those two names.